Yes, it's interesting to note that in the last 10 years, emerging markets have outperformed 7 of those years. It's only 3 years that emerging markets underperform the developed countries. And it's actually last year there was underperformance, but the year before, 2012, there was outperformance by emerging markets. Then the year before that, there was underperformance. So a lot of people draw the conclusion that, it's been 3 years, but actually it's only been 2 years. And this year, so far, the emerging markets have surged ahead and are outperforming the developed countries. And we believe that is going to continue. The emerging markets will continue to outperform. Yes, if you look at each of these situations in Asia, each one, of course, is unique. Looking at China, China in 2010 grew by 10%, and about $800 billion was added to the economy. Last year, China grew by 7%, but $900 billion was added to the economy. So that you see, although there's a deceleration of growth, the size of the economy, of course, has grown, and the amount of money being added to the economy each year is growing. So we're not worried about growth in China at all. If you turn to Thailand, you notice that despite all the political rhetoric and the political upheavals, stock markets continue to rise. And when the military coup was announced, the stock market went up. So we feel that the stock market in Thailand will continue to do quite well going forward. There are a number of other political events taking place around the region in Asia. The dispute between Vietnam, Philippines, with China regarding the seas, South China Sea. This is going to be an ongoing issue and will take many, many years to resolve. But it really would not have an impact economically, as far as we can see. Social unrest now is going to be more common globally, not only in Asia, but throughout the world. And the reason is people are better connected, communicating with cell phones, with smartphones now. Last year, 1 billion smartphones were sold around the world, in addition to many more cell phones. And over 60% of those sales were in the emerging countries. So you can see a lot more communication between people, their ability to complain to their governments, their ability to get together and demonstrate will be much more prevalent around the world. So governments are on the defensive. They will have to deliver to their populations much more effectively. Yes, the elections taking place in Asia, you've noticed that in India you've had one election and a reformer, Mr. Modi, was elected. You just had an election in Indonesia, and there are other elections coming down the pike. The very distinctive nature of these elections is the move towards reform. There's an incredible pressure to reform. And as I mentioned, the proliferation of cell phones and the internet has become an instrument of transparency. People are much more aware of what's going on, and they're willing to complain. So that is having a big impact on elections. Well, if you look at our portfolios, our global portfolios, you'll see China's up at the top of the list. You'll see India's there, of course. Russia, despite all the problems with Ukraine, Russia is very important to us, and we think many of the Russian stocks are underpriced. Brazil would be very high on the list. So the BRIC countries are definitely prevalent. But then besides that, you have quite a lot of money in Turkey, in Thailand. In our frontier funds, we have quite a lot in the Middle East, in the UAE, United Arab Emirates, in Nigeria, in Kenya, Vietnam. So there are a number of countries that are very interesting to us. And of course, as we mentioned, Thailand is very important as a growth engine. Regarding sectors, if you look at our portfolios, you'll see the banking sector is very important because banks reflect the tremendous growth that we are witnessing in these emerging countries. Secondly, oil and gas. Diversified oil and gas companies are important. We believe that the demand for fuel will continue to rise globally. Prices are very strong in the oil and gas sectors, so we think that is an area where we want to be. And then consumer, because per capita incomes are moving up, so we want to have exposure to consumer stocks. The biggest risk, of course, is the fear of volatility. And I underline the word fear, because volatility in and of itself is not a problem. In fact, it's an opportunity, because if you have very volatile stocks, you have an opportunity to buy at low points and hopefully sell at high points. But people get very fearful when they see volatility, and therefore they freeze. They don't take any action. And they sit on cash for too long. And as you know, what's happening in the interest rate environment globally is not very healthy.